the fears of a recession, which have caused all sorts of markets around the world to lose all kinds of money. £40 billion knocked off the FTSE 100 yesterday at the London Stock Exchange. The main index of companies fell by 2.04%. Weak economic data in the United States has stoked fears that the US Federal Reserve has kept interest rates too high for too long, and so JP Morgan, the Wall Street bank, has now warned there's a 50% chance the US will fall into recession, which would be more bad news, of course, for Joe Biden and Kamala Harris. Let's talk to Laurie Laird, US political commentator and economist. Laurie, very good morning to you.
Hi, good morning.
Where did this kind of fear begin? Because it's sort of, we got wind of it yesterday on the Nikkei over in Japan when it started to lose power and lose value. What's the problem in the US?
Well, let me bring you up to date really quickly, though. Yeah, the Nikkei was down 12% yesterday. That's a massive move. But at last reading, the Nikkei was up 10% today. So net over the past 2 days down 2%, which is a lot less dramatic than what we were looking at yesterday. A lot of these stock markets, and we'll get to this, had become so overbought. There have been stock market rallies across the world, and a lot of this is just reversing some of these recent gains. But I'm digressing a little bit. The proximate cause for all this was a economic report out of the U.S. on Friday. It was an employment report, and this jobs report is really, really widely followed. It sort of sets the tone of trading for the month. Now, this jobs report, a lot of people were saying it was very weak. It wasn't very weak. It was less strong than people were expecting. The U.S. economy added 114,000 jobs in the month of July. That's less than people expected. It still added jobs. On net, it's not giving back jobs, right? There isn't a net loss in employment. So we've got to be a little bit careful about talking about how weak this report was. It wasn't. It was less strong than people imagined it would be.
Right. Is it the usual case of people in the various city jobs that they've got just making a bit of money? Because I always tell people this, I've always had a lot of knowledge about this, second-hand knowledge. I've got members of my family and friends who work in Wall Street and that kind of thing. And whatever happens in Wall Street, no matter what, they all make money.
Well, look, I mean, somebody's making money, right? Because when you do a trade, somebody's buying and somebody's selling.
Right.
So there's always somebody on both sides of that deal. So somebody could be making money somewhere along the way. But I think that we can try and over-explain this, where we have to look at the basics. Wall Street is up so much. It's been up so much over the past year that any excuse for people to, in market terms, the pardon says, take profits. And it's exactly that. If you have gains, there's this jobs report last week gave people an excuse to just take those profits, right? They bought at a certain level. Stocks have gone one way over the past year. So give me an excuse to sort of book those profits. And then if you're a professional trader, you might take any kind of dip, any kind of retreat in prices to get back into the market. And yesterday, as you said, the FTSE 100 was off 2%. That's not nearly as dramatic as that Japanese move. And in fact, 2%, it's a big move, but it's a sort of move that we see from time to time. FTSE's up 10% over the past 12 months. So, anyone who's been in the market for a long period of time is still looking at a pretty significant gain. And I'm willing to bet you. So one of us, if we do this deal, one of us is going to make some money, right? That's how these things work.
Exactly.
I'm willing to bet you that the FTSE will be up more than the loss that we sustained yesterday at some point today.
Okay. And any concerns for anybody if they've got like pension funds to worry about? Is it going to be okay?
Look, I'd say anyone who has pension funds, and a lot of pension fund money is invested in the stock market. I think what I would advise is try not to watch day-to-day movements. This is what stock markets do. They go up, they go down, but it's in terms of a pension fund, you're looking at the longer term. So try not to get too concerned about any intraday movement.
Okay, good to talk to you, Laurie. Thank you very much indeed. Laurie Laird, calming the waters there for us, US political commentator and economist. Maybe nothing to worry about, but it does look bad when you see £10 billion wiped off the FTSE 100. It does tend to make people a little bit jittery.